Okay, hi everyone. I'm Denis Belkovich, General Partner of Fuel Arts. Welcome back to the Art in Tech and NFT webinar series. We're currently finalizing working on our global art tech startups market report to be published in 3 weeks. So, as we announced earlier, the report will focus on the art tech and NFT startup ecosystem and investments made in this sector in 2021. Unfortunately, we can't share the final numbers with you, my friends, at the moment, uh, until this info is published in mass media supporting us. But right after that, the industry report will be available online for free for our listeners and our, as we always say, art tech colleagues and aficionados. Though, as soon as the report focuses on 2021 numbers, nothing prevents us from sharing some info regarding the January 2022 ones. And we should say they are very impressive. Yes, my colleagues showed the diagram. So in January 2022, investments in art tech and NFT startups amounted to 556 million, which is an absolute record per month in history. Also, I should mention that the physical art market is represented by only one startup, an online marketplace of contemporary African art called Anka from Cote d'Ivoire. As you can see, they received 6.1 million, and the remaining 16 startups represent the digital art market, young companies in the field of production, trade, and analytics. So let's see what February brings to us. Also, we're happy to announce that admissions for Fuel Arts Online Pre-Acceleration Program are now open. We offer 2 7-week online courses starting from late March for young entrepreneurs at the stage from idea to prototype. So the first program will be called Disrupt the Art Market for founders wishing to make a difference in the physical art market, in the market which works with physical objects of art. And the program number 2 is called Successful NFT Startup. So this course, as we see, is a perfect fit for professionals wishing to enter the booming and exciting hot NFT world. So the both programs will result in a demo day, and the winner chosen by our board will get a free prototype from Fuel Arts. And the startup will be automatically taken to the next stage accelerator, which starts this fall. So the links to know more and enroll to the course could be found on our website. So 2 weeks ago, talking to Christina Steinbrecher Fund, the founder of Blockchain Art. By the way, today she has a birthday. Happy birthday, Christina. Wish you all the best in our tough but very interesting art and tech segment. So I had a wonderful and unexpected co-host, Diego Berrio, co-founder and partner at Amadeo Global investment firm, an investor, entrepreneur, business analytic with a 15-year experience in Europe, Latin America, and the US. So since that, we received several questions asking, will Diego be the co-host beyond again? Please invite Diego. So as soon as Fuel Arts has always been a community-driven entity, we decided to invite Diego Berrio again, but this time as the main guest and a fabulous investment management entrepreneur and analytic. So moreover, I should admit that Christina and Diego will both be among the mentors of the upcoming acceleration programs of Fuel Arts. So don't lose the opportunity to meet them again. Hello, Diego. Hi, Katya. I haven't seen you are here. And also
I
we
was
have,
hiding in the room until you guys let me in.
well, yeah, it means that someone works for Fuel Arts besides of me and you. You know,
Yes.
so
Nice to be
I'm
here. So sorry to join slightly late. Diego, good to see you here. I heard great things about the last webinar. And so excited that you are the key guest today.
Thank you.
So I
I
can
should
ask you
introduce you
questions
first,
as
Katya,
well.
because there could be, you know, there are at least few persons in the world who don't know you, but for them I should do that for sure. So Katya Coin, an investment partner of Fuel Arts and also co-founder and partner at Amadeo Global investment firm, who
Right.
has
And
rated more than 140 startups. So,
yes.
but today we're talking about the relations between young startups and investors, which is always a tricky thing. So my first question to Diego is the following one. So you've created several portfolios of startups for venture capital funds. So talking about venture funds regarding startups, we hear such a term as the deal flow, which scares the most of the startups, how to get into the deal flow. What is the deal flow? So what is the deal flow, and what is the process of selection of startups for the venture capital fund?
Thank you very much for having me again. It's really a pleasure to be here, and of course also sharing some time with Katya. So I would say that for just to explain a little bit about deal flow, I think in the investment world, in whichever fund, right, even VC or private equity, you like to think that you have different options to invest. And I would call that the top of the funnel, right? You have a deal flow means, okay, you have companies that either you have met because you reach out to them or they reach out to you. But in the end, you need to assess which one has, let's say, the characteristics and can go through an investment process or due diligence process so that you finally invest in some of them. Then you might probably heard that venture capital funds typically invest in 1% of the companies that they see in the deal flow. And many VC funds have 1,000 to even 3,000 companies in their deal flow per year, and they only invest in 1% of that. So of course, it is very important for any founder or startup that is looking for investment to understand what takes to go from every step of that funnel, right? If investments are being filtered out so that you can invest in the best and the companies that have the best merit, right? And merits for an investor in the end is having a successful exit. So founders should be aware of what we're looking for. I'm happy to share also that.
So Diego, thanks for bringing this up. As an investor myself, but I'll ask your wisdom. What do you think makes the startup and the founders like stand out across so many deals that get on your table? Maybe you do the screening of their websites, their profiles. What are the, I would say, top 3-5 things that you look at and you get impressed and you jump on the first goal?
Yeah.
What is your...
So the first thing that I would say is I think founders should understand the circle of competence and the interest from the investors, right? So some investors are very focused, right, on art tech, NFTs. Some other investors are very focused, let's say, on AI, mobility, etc. So the very first job is, okay, am I reaching out to a company or to an investor, sorry, that actually is interested in the space that I'm in? That's the very first thing. I would say that also, at least personally, the way that I prefer to basically assess companies is when they come through network, right? Network means referrals, or let's say, or maybe you have already an existing relationship with the founder, or maybe with what I would call second or third degrees relationship, right? I know someone who knows them, and in different events, people make very good comments about the founder, or how they're doing something very interesting. So I like to hear from other people who can vouch for this company and for the founder. That already gives me, I would say, the some level of validation that there is a network of trust, and there are people who are happy to say, hey, talk to this guy. I really think they're doing something great, and you guys should. So that's the very first way. So I would highly advise founders to start developing their network, so that whenever they reach out to an investor, it's not a cold outreach, right? It's there's already someone who is involved there. I would say that that's the very first thing. Once, let's say, if it's a cold outreach, I think it is very important, at least for me, it's very important to see that they have put time and effort in whatever marketing materials they're doing, because the way you do something is the way you do everything, right? So if there is no effort put in the deck, then why should I think that they're actually putting effort anywhere else? So having a solid website, having a solid materials, it's something also that I would consider as the very first impression. In the end, we're humans, and first impressions matter, at least in my view.
Well, as far as I remember, Katya was asking about the 5 stages, but let's keep the 3 in secrets. Well, my question is, let's say a common startup comes to you asking for advisory on financial modeling. Though sometimes it's easier to create a new business model than to fit in an existing one. So what all startups should work on? What's let's say, what should be done to let's say to create the right financial model?
Thanks.
I mean, before I'm talking about customer discovery and customer development.
I would like to take
my tip.
A little bit of a step back before we jump, let's say, into more, talking more about finance. Maybe I think it's important to, I think investors, especially in the venture world, we're more than financial analysts. I think we are business analysts, and business, it's also made by humans, right? So, and I think it's important to think also about 2 spheres: the very early stage and, let's say, the later stages, right? Let's talk, because we're talking here about early stage. I think is from an investor perspective, I would even consider just going to the next phase, which is supporting any kind of financial needs or financial, let's say, financial advice in terms of modeling, etc. If I see that certain characteristics in the founders, right? I think there's the need for vision, but also a high ability to execute. I learned very early in my career that, let's say, when it comes to venture capital entrepreneurship, 1% is inspiration and 99% is perspiration, right? So, okay, you have an idea and then you need to execute, and executing needs to be also done in the proper way. So with the vision, and with those 2, vision and execution, you should be able to attract not only capital but also talent, people who are highly talented that follows your vision. Then with execution, you need to be able to show that once you say you're going to make a milestone, you actually get it, and you go through a clear plan. Then there is the emotional EQ, right? The emotional intelligence, right? Can you manage the volatility of your emotions as things go or not the way you expected? This is a very uncertain life, right? The one of entrepreneurship. So high EQ is very important. And the last one is something that we discuss a lot with Katya, which is coachability. We even coined this this term, the coachability index. So we discuss, after we have a conversation with the founder, we say, what do you think is the coachability index of this founder? Is it high? Is it low? And we don't expect founders to do what we believe should be done, because in the end they're driving the business, right? But to at least hear and let that information or that feedback sink in their minds, and then consider if there might be some different angles that he might or might not be considering. And now let me drive. Sorry for that extended.
No, that was excellent, timely, and I mean, very helpful. I would love to hear that. Let's say if 4 years ago when I had my own startup.
Okay. So in terms of now, say, jumping into the financials, right, which is something that I work on a daily basis with founders. I think the very, very first thing is very important for us to see that founders understand the industry that they're in, even if it's one that they're willing to disrupt or one that is emerging, right? They need to understand what are the forces around this or within this industry. What are the levers that generate economic value? Once you see that there's clarity in this picture, and that what they're building has a very clear and specific purpose within that ecosystem, then right you can move towards the next step. So the next step is unit economics. I think one of the things that really helped us to build a partnership with Katia was the fact that we had the same vision in terms of unit economics, right? We want to invest in business that have positive unit economics, so that the company is never subsidizing, I would say, let's call it the gross margins, right? You need to sell at a profit, and you need to have profitable clients. It's different if you subsidize, let's say, growth in terms of you have people, resources, but on the unit economic levels, and let's call it customer acquisition and lifetime value, and the ratio between those two, you should always have something that is reasonable, because at scale, most likely they could potentially improve. But once you go to a bigger market, after you go to your serviceable obtainable market, your numbers get somehow diluted. So that understanding of the unit economic is very, very important. I would say that it's also important for us to assess, okay, how much capital do you need and why, right? And some answers sometimes come like, I want to raise as much as I can. Okay, but what do you want to do with that? Well, I would just want to have enough runway. Okay, but to do what? Well, to raise the other round. Okay, but what are the metrics that you need to get to the other round? So we want to see that the goal is not raising, that the goal is to build the business, right? And that the capital is just an enabler and a catalyst. So we want to see that basically the capital is something that fuels the obtention of certain milestones. And I think that's pretty much again, sorry to extend, but I think from a financial perspective, that's what I would ask the founders, or at least ask them to take into consideration.
So, Diego, that's great that you described on the founders, the company, the basics. Let's say everything is great there, but they get to meet the investor and they pitch you. What are the common mistakes that let's say founders make that is a turn off for the investor, right? Like overall, well, everything was solid until this moment, and what would that be? Any mistakes that you remember? Yes. Top 5, I'll shorten top 3.
Yes, I think that the very first one is not even something that you say, it's how you say it, right? It's basically your attitude. So when you're pitching, even if it's a 10-second pitch, you need to transmit this engagement, this enthusiasm about what you're building. So it's very different if I say, hey, I have this startup, that it says, hey, this is my startup. Right? I said exactly the same, but I'm already generating some level of engagement. So when you have the wrong attitude, then it's like you don't even interested, even if whatever the person is saying is great. Then second, I would say sometimes founders try to say a lot, but sometimes the more you try to say, the least the other person understands, and it can become very confusing, and actually you lose the attention of the person. Today, the attention span is very, very short, so it's better to just hit on the nail right away, and then expect questions, and always ask for questions, because that's the way you engage, right? That's the way you build a conversation. So I would say being confusing or trying to put too much information into a couple of sentences. And then the last mistake would be not to generate engagement through asking questions. It's like, do you understand what I say? Do you think what do you think about what I just said? What was I confusing? Was I clear? Even if it's a very, very brief conversation, I would say those are the very first mistakes that can really turn off very quickly a potential investor. If he doesn't, or in this case, if I don't understand, I wouldn't invest ever in something that I don't understand. So I think that's very important.
Thank you, Diego. I also heard something from your advice that could be used to improve my personal experience of pitches. Though my question is the following. So many startups we're talking to consider that obtaining the first investment is the hardest stage. Then they can feel relaxed. But in your opinion, and mostly from your experience, what's easier and what's harder, to find the first funding or to proceed, so to find the later stage funding?
That's a very good question. I would say that the at the beginning, right, when you don't have let's say the skills necessarily to fundraise, right, you need to build some level of understanding of what is it that you need to show. However, I am I'm one of the school of bootstrapping somehow first, and getting some metrics that show that you can show and generate excitement, right? So I'm not the kind of investor who would give a check just on a deck. Many do it, but that's not, let's say, I'm not at that point. So idea is okay, but you need to have something to prove that you are highly qualified to execute on that vision. So I would say that the most difficult thing, or the most important thing, is to be able to show to your potential investors that if you're not there yet, at least you have a good sense of product market fit, right? That you are building something that has a clear use case in the world, and that people will be ready to pay more than it costs to deliver that service or product, right? So that's very important. So if that's the case, then we can engage in a conversation, and then we can definitely assess a potential investment. But is demonstrate ability to execute on a vision and have some early metrics where you prove that you're onto something. Then the capital should come.
May I ask you an additional question? Sorry, Katya. While you were replying to the previous one, I remember that we're also facing with the common gap, let's say two common gaps of startups regarding bootstrapping. Bootstrapping, for those who doesn't know, it's investing its own money, so taking money from the pocket of of the founders. So the first gap or hazard is that a startup wants to, let's say, they decide to fundraise the soonest they elaborate the idea. They have the idea, okay, they create a deck and they are trying to fundraise. This is one case. The other case is on the opposite side of this hazard scale. So startups are bootstrapping, thinking that the more they invest themselves into their product, into their startup, the more money they will get for less percentage during the first investment. So they're investing for 1 year, for 2 years, for 3 years, and so from your experience, how to find the right time to stop bootstrapping and to start looking for investment?
That's a tough one. I'm I think there are different things to take into consideration here, right? Let's talk, for example, about NFTs. So you know that there's now a lot of capital, a lot of interest in this industry, right? We know from past experiences that there's an initial interest, and then that interest fades, and let's say, and then the industry solid becomes more solid, and then but there's the initial hype is gone. So I think founders need to be very strategic on how they leverage the interest, right? It's not, for example, the same today. It's not going to be the same to talk about NFTs today than talking in 1 year or two, once the industry is more robust, especially when you can have access to non-institutional capital, right? So there are many friends, family, let's say fools, right? The 3Fs, who would be very interested not only to support you, but also to support something that they've been hearing that is growing a lot. So being smart about when to fundraise can be as important of if you bootstrap or not. So some you see today, or whenever there's something in hype, there are many founders racing just with the deck. But what I would suggest is to start. I would say don't quit your job yet. Start building something with a team who are also very oriented with the vision. And when you start seeing that it's not enough, that you already have some metrics, that you need, actually it's now the moment to scale and you need more resources, then that's why I would look for capital. But you need to see yourself that you already have some level of traction, that there's something going on, and then if you want to boost the opportunity and basically the results, you can only do it with a catalyst like capital. But if there's no need for a catalyst, I would say don't take money unnecessarily. That's my advice.
So I can jump into this, Diego, since you mentioned NFT. So imagine NFT is the startup, and it comes to you and asks for cash. Like, how would you assess? What kind of recommendations would you give? And treat it as like its own unit, not just the whole big thing. So how would you approach, assess, analyze, and give recommendations to NFT as a whole?
So if you're saying if there is an NFT who comes and talk to me, or if there is
like a SpongeBob, as I understood that.
Like a it's like a sponge. Yeah, in a sense, like a SpongeBob that ask for cash to grow and scale and create more SpongeBobs of the world.
Okay. The first thing that I would ask is, hey, SpongeBob, what is your purpose in this world? Like,
now that you know the NFT purpose, like, no, don't ask. Like recommend. Like, okay, in NFT, your purpose based on your pitch is SpongeBob, but I believe you shouldn't be SpongeBob. You should be, I don't know, Spider-Man. Like, what would be your recommendation, kind of thing? Well, and questions too.
Yeah, I mean, I think before, I mean, more than recommendations, I would love to understand how I can, let's say that I might be interested to own this or have a relationship with SpongeBob, right?
Well, I
So
don't know, Diego, your relationships, but with
like,
SpongeBob.
let's say a relationship means to keep it in my life, right? To so that I don't say I own SpongeBob, but to keep it in my life. I think it would be. I would love to understand like what is the potential for interaction, right? Like where can I just see it on my phone, or can I just see it once a day, or can I interact in different ways, right? And I mean, going a little bit more is, can I interact with you in the metaverse? Can I just see on my phone? Do I need to buy a LED screen to put you in my apartment? Like how can we interact, and how can that interaction be easy? The other thing is, how can I make sure that this is a long lasting relationship, right? How am I sure that I'm not going to lose interest on you, and that I'm investing in this relationship, but maybe tomorrow there's going to be another, I don't know, purple punk square SpongeBob that I'm going to prefer, and then I'm just going to lose all my investment in this initial relationship, right? So I think so basically, is this a trashy relationship, or is this really, are we really building something? And I think that's more on the collectible side, right? And all the increasing price that we see today. Maybe it's not the perfect analogy for this humanoid NFT,
But then, okay, so let's say, are you here to stay or not? How about like the business model? Or like you will say, SpongeBob, where's the cash? Like, we're like, what else other than relationship?
yeah, I agree with you, right? So that's why I asked the long lasting. So the question is, are you as a collectible, right? Because I'm, I'm taking this collection in this relationship with SpongeBob. I would say, can I really trust that you have value? Can you trust that if you were not digital, but you were in the real world, you are a Manet or a Picasso, or are you just nothing, but I'm paying a big amount for you? So I would say, hey, why don't you make sure that it's a good artist who is designing you, and that digital artist can actually create something of value that can perpetuate and that can store actually value in this like forever, right? A little bit like well, I just mentioned that. So I think that store of value from creating and having some benchmarks that people can make sure that they're investing and not just gambling. I think that's what I would like to see in the industry and in the business. I mean, at least for digital assets.
Yeah, but
Then,
go ahead.
no, go ahead.
No, I was just curious. I think like things like that you only will see few years later in a sense, because if I think about art in particular, Van Gogh was a crazy dude in his times, right? Dennis, you know better, but I think he was crazy, literally crazy, psychopath or something. But then his time, there were some people who thought whatever he's painting is piece of crap. So I think some things just takes time to zoom out and see later on.
Agreed.
As we all know from the physical art world, the value of art is based on the history, better say, is based on the story behind the artist and behind the artwork. So unless an NFT artist creates a story behind his NFTs, because art is based on art is a peace of mind, art is a source of information, art is a DVD with the information, which I mean, with the story, with the information which the artist, a certain artist, wants to share with the world. If he doesn't have that cluster, that information behind the artwork, this is not an artwork. This is a craft work.
Then
That's my personal definition.
then
So
maybe some people
regardless if this is an artwork, let's say, supported by the NFT coding, covered with the NFT contract, or it's brick and mortar painting or sculpture, there should be a story behind that.
I agree. Then it's just a little comment. Maybe some people in the audience don't know what a DVD is.
Wow, come on.
Yeah, Gen Zs certainly don't know. Sorry,
Okay,
guys. Yeah, that's.
Well, by the way,
but they know what vinyls, what vinyls are.
yeah. Anyway, just
So
kidding.
they're looking back to the generation of the 70s and think that vinyl plates are, let's say, the super contemporary assets, which is good. I also own a vinyl player from now on. But let's
hold
let's
on. I
get.
think Dennis, hold on. I think Diego didn't finish his perfect SpongeBob yet. Were there any other recommendations?
I think that moving. I mean, as an investor, I think that from as an individual.
Where are you guys?
I think it's Diego.
In that case, I'll finalize the story about Van Gogh. So, replying to you directly, Katya. So there was a story behind Van Gogh.
Exactly, that he was crazy.
And the next generations, when they found that story, the story of, let's say, inventing the new trend in fine art, even the story of cutting off his ear, a part of his ear. By the way, one of the best PR managers I knew, Professor Mark Saylor from LA. 10 years ago, he gave a lecture which was titled "Van Gogh is the first PR manager in the art world," and he just explained why. But since we started talking about NFTs, I believe Diego will be back soon.
Unless SpongeBob consumed him.
By the way, while he is temporarily away, have you purchased any NFTs?
Me recently? Yeah. Nothing like substantial.
Recently, but let's say in whole.
Some stuff, yeah. Like, but what is actually what you mentioned me recently? There was something that you bought that was like last month.
Yes, yeah, I purchased. I don't want this to sound like an advertising because I don't but I would love this artist to come to the next or in one or two webinars to share her experience, because she created a series of her artworks based on gamification. So she added the gamification, she added her story. That's why if I buy, regardless if this brick and mortar physical artwork or an NFT, I buy the artworks created by artists with a story behind. So
here you go.
Yeah, Diego.
SpongeBob
Hello again.
Yes,
so naturally we've finished with let's say imaginary situation, and would like to speak about NFTs as a part of our surrounding, a part of our real life. So have you seen you must have seen investors' interest towards NFT inside the venture capital society. And of course, you might have heard of fears and questions that investors have when it comes to NFT. So could you please enumerate it and confirm or disagree with the growing interest? But let's say I can confirm it with numbers, even if you disagree.
Did he freeze again?
So it's your turn to reply, Katya,
No,
because
hold
you
on,
work
let's
with
see.
Diego. You are his partner at Amadeo Global. So what could you say about the rise of investment interest or investors'
Overall
interest?
in the NFT and stuff?
Yes.
Well, I think Diego mentioned that actually there is like cycle and everything, right? So I don't know how to describe it, but the interest right now is super hot. Of course, we don't have the zoom out picture if it's here to stay or what's going to happen. I do believe it's here to stay. Very similar to what happened before. Here you go. Diego, I started responding on your behalf, but I'm not as SpongeBobby enough. But anyway, Dennis' question was, what is your perspective from investment standpoint on the NFT and the market? I believe it's here to stay, but it's in the perfect hot cycle right now. That's just my take.
If to be exact, I was asking about about what you've heard from the other investors. What were their fears which prevented them from investing into NFTs as an asset or to NFT ecosystem startups? Or, what prevents them and what makes them doing that? What pushes them forward?
Sure. I think in terms of fears, there's always valuations, right? I agree with Katya that there's a general consent that NFTs are here to stay. The question is how much are they? How can we value the, let's say, companies in the ecosystem today? You're seeing, and the question is very relevant because look, for example, Robinhood and Coinbase, right? They have lost, and even companies that have tech companies that have gone IPO during and post pandemic, right? They have been losing their market cap in 30 to 70%. So the stock prices have them. So the question is, okay, are we valuing correctly these companies? That's a big question. So I think that once we go through the hype and as the hot part of the cycle, as Katya says, and we understand realistically the trend, it will be clear. We're gonna see maybe in 1 year, like what is the real volume and the real prices that people will be paying for NFTs, right? In OpenSea or other exchanges. I would say that, however, since the industry is here to stay, I would focus as an investor not on the digital assets themselves, but in the infrastructure to continue developing the ecosystem. I'm sure that we're going to need more exchanges, we're going to need more production companies that are going to help to store the NFTs, companies that are going to help us experience the NFTs in the metaverse or in whichever, let's say, vector that we want to use, and also analytics on the industry. So that value chain is where we want to be investing, right? Not on the value up or down of certain specific assets that can be uh, overpriced or can be, let's say, subject to speculation, but more on companies that we say, okay, this industry will certainly grow 10x, 100x in the next 10 years. Let's see who are those potential winners that are now emerging that need backing that we can support. That's what I would be focusing on.
Before Katya asks her question, I'd like to share some information regarding NFTs, which we found. It's also regarding January. So as I said, in the beginning of this stream, the investments in art tech and NFT startups amounted to 556 million, so which is an absolute record per month in history. But we have another record, and it is connected with the amount of the NFTs sold, of NFT collectibles sold. So the trading volume in January amounted to 6.8 billion in 1 month sales. Of course, you were talking about the market leaders. Of course, the leadership in NFT market continues to be held by the OpenSea marketplace, which also this January received a 300 million investment and now has a valuation of 13.6 billion. So we have the first decacorn in the field of art NFT startups. So
with that said, I can ask a question.
no, I mean that. Why did I say that? Not only to support the NFT trend or to give some hopefully valuable information, but I should say that a year ago, many believed and many analytics saw a very high correlation of the rise of NFTs and the rise of capitalization of cryptocurrencies, especially Ethereum. So, and now we see a small recession on the cryptocurrency market, but the NFT market went up. So the correlation becomes less and less visible. I mean, the digital assets and the cryptocurrency, which is also a part of digital assets.
You can have, I mean, maybe the correlation is changing, right? I mean, this is just a theory, but if I see that the crypto is going down, then I want to maybe liquidate a portion of my assets and put them in NFTs that are booming, right? So it's going to be a negative correlation, but the correlation will still be high, right? So that I'm not, I haven't seen all that, I cannot tell you, but that's maybe something that is happening. It's like with this stocks and treasuries, right? If there is a flight to quality, that because there's a lot of volatility in the stock market, then you have an appreciation of the bond. So maybe because you have retail investors and especially Gen Z that are they're not going to go to treasuries or to stocks, so they will diversify between crypto and NFTs. This is something that could be happening.
This idea seems to me a very reasonable one.
Yeah, it's more basically based on the numbers you gave. The question is like, who are the people behind investing? And as you said, they're completely different type of investors. People going for NFTs or people investing on NFT startups. My question is for you, since you're in the venture background, where do you make your bets the most? In the NFT assets themselves or long-term startups that, as you said, changing the ecosystem as a whole?
You mean Dennis or you mean Diego?
You, Diego.
Diego.
I bet today I don't see myself, I don't have this, I wouldn't say that I can today, I don't have the skills today to choose the right digital assets. I would certainly focus more on those startups that are building the ecosystem that is growing and that has lots of potential. So I would focus more on those.
Well, Dennis, then question for you, since you've been buying NFTs.
I'm
Give
buying
us your
NFTs
secret.
I can't consider that to be a financial investment. That's an emotional investment for me. As you know, there are three types of investment in art: emotional, social, and financial. So buying NFTs is mostly an emotional investment for me because I've been supporting young artists for at least a decade. So I don't care the material and the legal coverage, and if they come from physical world or from the digital one. So, and as for financial investment, as well as we all know what Field Arts is doing. So we're investing in startups. So when I'm asked, why why aren't you investing in artworks? I say I invest in startups which help to create the artworks, trade it, manage it, and analyze, as Diego said, perfectly said, in my opinion, about the value chain. So thanks to this webinar, I personally added several let's say phrases and terms into my vocabulary, and I'll start using that.
Thank you very much, Dennis and Katya.
Yeah, and by the way, as an advertising for the next series of our webinars, and following what you've said, Katya, in a few weeks, let's say the next guest will be a prominent collector of digital art and NFTs, who has also created his own company, his own digital collection, his own startup, and also will invite several artists after that and their community. They will tell about how to navigate in the community of NFT lovers. So yes, but every week we'll know, we're discovering the market, and we know more and more information about the habits of those who are buying NFTs, hiding behind the avatars, which is good. Thank you, Diego. I believe that was wonderful mentorship. I would call it a mentorship for all of us.
Thank you, Dennis, for having me.
Thank you, Katya.
Thank you, guys.
So we're engaging everyone to enroll in our pre-acceleration course who have an idea and want to test it with our 20 plus mentors. I'll remind you about the two variants of courses: one for brick and mortar startups, of course, art and tech, and one for NFT startups. And Diego will be the mentor in the both courses, and Katya as well, and me as well. Okay.
Thank you, guys.
So,
Talk soon.
thank you
Bye-bye.
so much.